Hey guys, this video is part of my series on Jesse Livermore, which is this book. The book is Reminiscences of a Stock Operator. I think they could have used a little easier title, but the book's over 100 years old. It's been voted one of the best investment/trading books by multiple hedge fund managers, IBD, Wall Street Journal. So I'm doing a series on the lessons out of this book, which I still use to trade today. And what I want to walk you guys through is the T.I.D.E framework. And this is a framework I put together from Jesse Livermore's trading ideas. And after I walk you through the framework, I'll show you how to apply it to a couple of trades. I'm away from home right now, so I'm like literally writing notes on pieces of cardboard. We're going to walk through these trades after going through this framework. And finally, if you want a copy, just like I've said in my other videos, if you want a copy of this book, just type the word stock into the comments and I'll get you a free copy of that sent to you. So let's walk through this framework that Livermore traded by and learned over his trading career. The first thing is timing error avoidance. And what that means is I see a lot of traders learn a pattern or learn how to use a trading setup, but they don't enter the trade or exit the trade at the right time. So how many times have you entered a trade and gotten stopped out just to see the trade turn and go in the direction you thought it should go in? That's a timing error. I see traders do it over and over. You have to wait for the setup to play out before getting into the trade. The next thing is identifying confirmation. You need confirmation on a trade. And again, when we walk through these trades, I'll talk about confirmation and what that looks like. But confirmation is basically saying, here's the setup, and now here's the final step in the setup. And a lot of traders miss that final step. That final step has to happen. The confirmation that the stock or the market is moving in a certain direction or that it's reversing. You need that confirmation to take place. And a lot of times traders jump into a trade forcing a timing error because they don't wait for confirmation. The next thing is discipline of your emotions in trading. Everyone has emotions while trading. It's literally what makes the market fear and greed. It's what makes the market move the majority of the time. But you have to control your emotions in your specific trade. Again, it doesn't mean not having emotions. It just means knowing what your stop is, having a profit target, so that it's very clear how much you can possibly lose and what kind of gain you're looking for in the trade. That will help beyond anything else that I've seen in controlling your emotions. The next thing is putting this all together is where profit comes from. That's how you earn a profit, by getting your timing correct, by identifying the confirmation at the end of the setup, the last piece in the setup, controlling your emotions during the trade. All of those combined get you to profit and get you to consistency, which is one of the things people have asked about in the comments on my videos. How do I get consistent, or I'm not consistent? This is how you do it. So let's take this framework and apply it to these trades. And again, if you want a copy of the book, comment stocks below or comment stock below, and I'll get you a free copy of that. So let's look at these trades. So let's apply the T.I.D.E framework to some very simple trades so I can show you the framework in action. Here you get a hairpin turn in Amazon. This is a 2-minute chart of Amazon. For a hairpin turn, you need a couple of things. You need a trend. So you've got a short-term trend. You need a large candle, in this case, a red candle that's larger than the green candle just before it. It's a reversal signal. So we're looking for this up pattern to reverse. And we can see that Amazon has been, really weak in this time frame. So it wouldn't be surprising to see a reversal at this retracement point. It's about 50% of this move. It wouldn't be surprising to see it turn here and move lower. So we have the setup of the hairpin turn. We're not going to make an error in our timing, though, and enter this early, like enter this during this candle, because we need confirmation. Our confirmation would be a candle that finishes under our large red candle, right? So that's what we're looking for. We want that to happen in the next couple of candles here. And what do we see, right? Amazon holds this price and reverses. And it wouldn't be surprising to see it move lower off of this. It broke out of a range here, this small short time frame range, but it broke out and that price was immediately rejected and it went back into the range. Again, not surprising if it would move lower, but we're not going to commit an error by shorting just on this first part of the pattern until we get the final step, which is a confirmation, a finish below. That never happens. So this trade wouldn't be taken because the setup never played out. Again, we prevented an error in our timing. It was a good idea, but not the spot for that short to work. Now, if we go a little bit later in the day, we see another hairpin turn. We have an uptrend, hairpin turn, and then we get immediate confirmation. So we're not committing an error in our timing because we have confirmation. We now have a stop just above the high. Amazon tries to move higher, but literally just sets up a base in this lower portion of the hairpin turn. And then we get a nice fall off and a nice profitable trade in Amazon. But it worked because we had a setup. We didn't jump in too early. We waited for confirmation. We knew exactly where our stop was to control emotions. And we ended up with a profitable trade here on this hairpin turn. So let's now apply the T.I.D.E framework to a range break. Again, a very simple trade. Let's look at PLTR for a range break, or Palantir. So Palantir, if we look at it, traded very weakly on this Friday, and then we're heading into Monday. It recovers, but trades in a range. So if we're looking to possibly go back and retest these lows that it hit on Friday, it wouldn't be a bad idea to look for a break lower out of this range, which basically set up here between around 136.80 and 137.88. So call it $1, right? We have $1 range that we're talking about. If the idea is that PLTR could again go back and test the lows, how would we apply T.I.D.E to this? Again, it's a simple range break trade, right? It's a continuation pattern that we're looking for. PLTR, again, went much lower, bounced back up, and we're looking for basically a continuation of this short-term downtrend. We get the range set up. We're not going to enter early, as it looks like we're going to break the range here, where it looks like we've got a new pivot low coming. Pivot low here. We trade in the range, and then we go down and retest this pivot low. What I see a lot of people doing is anticipating the break and shorting at what they think will become a new pivot low. And then you end up with support holding and a move higher. When you're talking about support and resistance, what you want to see is a setup occur at that level. I'm not just blindly buying at this support level to catch the bottom of this range. And I'm also not just blindly shorting at this level because I think it's going to go through. That's an error in your timing, right? If you shorted here because you thought it was going to break, it bounced right back up in your face because you didn't have a good short setup at this support level. Later in the day, you get a break of the support level. This candle breaks it. Then the next thing we want to see when you have a break of support like this and you're looking for the stock to move lower is confirmation of this candle closing lower than the first candle. And here's where we run into a little bit of discretion. As this candle, this 2-minute candle is forming, since we know what it's going to look like, it would have been a great idea to short at this level as we broke, right? The problem is we don't know if this candle is going to look like this at the beginning of 2 minutes or if it's going to look like this at the beginning of 2 minutes. This candle did the same thing, right? It started here. It looked like it was going to go lower, but then it actually bounced up to the top of this wick and it actually finished here. This candle could have started here, gone a little bit lower, and then bounced. You just don't know in that 2-minute time frame what it's going to do. As the 2 minutes go on and you're getting close to the end of that 2 minutes, say you're in that 15 seconds left before the 2 minutes finishes, and this is something where we're talking about precise timing, because you don't want to be early on your confirmation candle because you don't know if it's actually going to close lower and confirm the move lower. This candle breaks the range. You need confirmation. It turns out that this is great confirmation and a great place to short. If you shorted as the candle was falling, it worked out great, but you didn't know this candle was going to confirm until later in the candle. So waiting toward the end of that 2-minute time frame is a great way to increase your percentage chance that the pattern is going to work and that you're going to get confirmation. You get confirmation. Let's say we waited until this candle closed 136.12 is where the candle closed. So short there with a stop back into the range. So 136.12 and a stop around 136.84. And you had a nice move lower in PLTR all the way down to the 134.80 level. So a nice almost 1.5 on this trade. But we got to this trade because we didn't make an error here. We waited for confirmation when the trade actually set up. We had a clear stop on the short. We had about a 70-cent range here. And like I said, we end up capturing close to 2R on this trade following the T.I.D.E framework. Our timing was right. We didn't commit an error and let the setup play out. We got confirmation. We had a disciplined approach to the trade because we knew where our stop was and we knew basically what kind of target we're looking for. If we're looking for 2 to 3R, and doing this over and over leads to that consistent profitability. And again, all of this was something that Jesse Livermore came up with 100 years ago. Another famous saying of his is nothing ever changes in the market. And that's because the market is governed by fear and greed and governed by humans trading the market. And human psychology has been the same for thousands of years. So if you, again, want a copy of this book, a free copy, reply stock in the comments below, and I'll send you a free copy. Check out my other videos in this series, the latest one right here. There's a link to it on the screen. If you found this video helpful, please subscribe, and I'll keep making videos like this going through trade setups. And I hope you're enjoying this series around Jesse Livermore. And I hope you read the book and get as much out of it as I have over the years. Thanks again for watching.